Retail sales this past holiday season growing over 5% from 2021 to more than $936 billion. But that fell short of what the NRF, the National Retail Federation, was forecasting. Joining us now to discuss the impact of inflation and the consumer, we want to bring in Yahoo Finance contributor Vera Gibbons. Vera, it's great to see you here. So retail sales, yes, we did see growth there of just about 5%, but not exactly that kind of growth, the 6 to 8% that we were initially anticipating.
Nevertheless, those are pretty healthy numbers there. I think the retailers were very nervous. Consumers weren't going to spend, given the rising interest rate environment, given the inflationary pressures, given people worried they were going to get let go. But consumers actually did go out. They spent. They responded to the early promotions and discounts back in October. They didn't want to miss out on those. They were afraid about stock out, so they jumped in feet first. They spent, and I think a lot of consumers actually just made up for lost time. They really wanted to enjoy themselves this holiday season. Big spending on experiences in particular, and of course, gift cards continue to be popular as well. Now we're getting into a different type of season, and this is the return season. And this is a challenging time for retailers because $171 billion, or about 18% of merchandise that was purchased over the holidays, is now expected to be returned to the retailers. They are, they're in a tough position because they've been lenient the past couple of years. They were nervous about consumer spending, so the free returns were definitely a thing that was attracting consumers. And now if you fast forward to today, their costs are up considerably because of the inflationary environment. They've got the shipping costs, the stock and restocking costs, getting it back on the shelf, logistics. It adds up. And, over the course of making a return, the retailer the actual item could actually lose as much as 85% of its value. And the retailers are not in a position to absorb those costs. So what we're seeing now is a lot of these retailers have changed their return policies, making them a lot stricter, really trying to crack down because they're trying to protect their margins.
What are the biggest changes in the return process this year?
Well, we are seeing shorter return windows, shorter refund windows. If you go to make a return, they may not give you anything back whatsoever, particularly if that item has been marked down several times over. And the problem is a lot of consumers are surprised. They go to make a return and then they find out, oh, wait, there's a $7.95 restocking fee or an $8.95 restocking fee. When did this actually happen? So consumers don't like the element of surprise, which is why we're seeing a lot of consumers re-gift or donate to charity. Just get rid of the gift any way they can rather than actually make that return. I think the big problem has long been what's been going on online. They have been super lenient. Just print out your label, bring it back, send it back. Bracketing has been a huge problem for the online retailers where you buy a bunch of different things, you try them on, maybe you keep one and return the rest. Fraud has been a problem for them, wardrobing. So they're really trying to put an end to that. In fact, if you look at what happened last year, most retailers actually changed their return policies or are in the process of actually changing them now. They're becoming more transparent. They're putting better pictures on their website. Ultimately, they're putting the onus back on the consumer.
Sure has been more difficult this year than I ever recall making a return. Vera Gibbons, thanks so much.